Hey guys, so welcome guys. This will just be a continuation video for the recent video I just dropped concerning Euro USD. So as I was saying in the video, I was like, if you will take a buy from this 2 hour breaker block, from the 2 hour breaker block right here, from the 2 hour breaker block, set your SL below and target what? Target your trend. Either you target your trend line liquidity, which is this zone, or you target what? Your drawn liquidity. Now obviously, some people are what? Some people are day traders, which means some people are scalpers, some people are day traders. Obviously, some people don't want to take trades on the higher time frame. Someone like me now, I don't take trades on the higher time frame, something like 2 hours and all. I use 2 hours and 4 hours for my bias confirmation. So now, after getting my bias on the 2 hours time frame, that what? Price has reacted from this my breakout zone. Sorry. Price has reacted from this my breaker block right here. This is my here. Price has reacted from my breaker block. Now what do? I now go down to the lower time frame, scale down, and what will I do? I come to my 15 minutes. Okay, let's go to the 15 minutes time frame. First things first, what do? You mark out what? This eye that price created, you mark it out. That will be your target for any trade, for any entry you are looking for on the lower time frame. Because of what? This is the last eye that price created before triggering this point of interest here. So after getting that in check, now after you've gotten that in check, you now start looking for what? You now start looking for entries. Now our first entry is this. We have our sweep here, as you can see. We have our sweep right here. Then we have our market structure shift right here, and this is our inducement. Price tapped into our order block. Remember, you target what? This eye that price created. That's why I already said mark it out with this horizontal line. That will be your target for the day. Since you are a day trader, you don't need to do more. Now this is the 15 RR. Moving on, you surely get more entries. You get. Now obviously there will have been more entries here if I had paid attention to the lower time frame, but let's just say this was just the two I caught. Now this is the second entry, same thing. We have a break of another eye here. A break of another eye here, which is this break of structure. This is even a double break of structure, and we have this initial break of structure at this level here, right? Now why didn't we use this breaker block? Our inducement has mitigated the weak of this breaker block. Remember I said in the last video, once your inducement has mitigated your breaker, that means your breaker is no longer valid. Then you'll be using your what? Your other block. Now moving on, price has tapped into this other block now, and what will be your target again? That same eye. Simple. Then on your 2 hours time frame, you are going to have something like this. Just from this little move that happened on the 2 hours time frame, you would have got a decent amount of RR on your lower time frame. That is just simply directional bias. Being able to utilize your higher time frame to take trades on your lower time frame. That's what directional bias is. But of course, there's still more to directional bias that you need to understand. But for just someone that is finding it hard, this is like a simple guide to it. So I'll drop more videos and probably in the future concerning probably my free time. But for now, you guys should just hold on to this. So next thing, what I would advise again is probably price creates another structure. Let's say price creates another structure, right? Let's say price creates another structure. Something like this. Probably price goes up now and probably pulls back down. You get? Probably pulls back down to now trigger another breaker block around here now. You know that this one will now serve as an inducement right here. I'm just saying, for instance, I did not say that this is what will happen. Let's say price triggered this breaker block here, for instance. Now, immediately you get that confirmation that what price has triggered from this place and it has given you a rejection. Now you as a day trader, that you know that you don't want to take trades on your 2 hours time frame, meaning you don't hold trades for long, you are just a day trader or probably a scalper. Then you go to your lower time frame, probably 15 minutes, 5 minutes, 30 minutes, depending on your time frame. You look for entries. Then when you check there, you look for what? You look for sweeps on your lower time frame. You look for what we call sweep. Once you get your sweep, look for your little MSS. Once you find the MSS, you want what? Your inducement. You want your inducement. Then you want price to tap into your POY. Then what did I say? Your target will be what? Your target will be the high that price created. Now obviously, if this high that price created is a kind of long high, meaning you don't want to wait to price clears off this place now, meaning probably this high is too long and you don't want to hold trades overnight or something like that. Probably on the lower time frame, you are going to be seeing what we call you're going to be seeing what we call drawn liquidity, meaning you can take your profit from the next drawn liquidity, your nearest drawn liquidity. Meaning on your lower time frame, you'll be seeing things like this: a high here, probably a little high that price formed on your lower time frame, little highs like that. So just do well to just take your profit from the next convenience spot for you. That's how you utilize directional bias. That's how you utilize higher time frame to help you take trades on your lower time frame. So basically that's just it. Now okay, for instance, now see this breaker, right? When price reacted to it, let's see if we are going to find let's see if we are going to get an entry on the lower time frame. Let's see if we are going to get an entry on the lower time frame. I'm not seeing an entry. Okay, so obviously we have this sweep here, right? I have this sweep, then we have this break of structure right here. After that break of structure, we have what? This inducement level right here. Now this breaker isn't valid for use again because of what? Our inducement has mitigated it already. Now our next zone is what? This breaker block right here. Now what the price do again from there? Price use that zone to buy. But this isn't, for me, this is not really a clear entry, but it's still an entry. Well, if I had seen it, I wouldn't have taken it because it's not really clear to me. But this is also an entry. Now what did I say? Remember I said if you don't want to wait for this high to get taken out, probably you feel like price might not take out that high that day and you want to take your profit early, this is a drawn liquidity. Now what are drawn liquidity? Drawn liquidity are zones in which when price breaks above that zone, that place becomes a break of structure, or that place becomes a new high. I don't know, maybe you get. Now if price breaks above this high, now this place has become a break of structure. Now this is another drawn liquidity right here. This is another drawn liquidity. This is another high, which if price breaks above it, it has become a break of structure. I don't know, maybe you get. And this is another high here right here again now. Now if price breaks above it, it has become what? Another draw on liquidity. So basically that's just it. And I'll be dropping more videos concerning this particular series, but that will be in my free time. So hopefully you guys understand how to utilize your higher time frame in line with your smaller time frame now. So GG's guys.